Right, gold and silver, and I'm doing this analysis for the benefit of all. That will be a thorough analysis that will last for the entire day until uh, proven otherwise. All right, so let's get into it. So, first of all, we've got ISM manufacturing on the cards. So, data will start dripping through 9:45 New York time, and then it will conclude after the ISM data is released at 10 a.m. And then we're pretty much free reign from that point on. You've got some Australian data in Asia, GDP, but apart from that, it's the US data at 10 a.m. that we're focused on, and nothing ahead of there. So between then and now, there could be a setup, there could be stuff to do on gold and silver. Personally, I prefer to only really look at gold and silver as a New York trader from 9 a.m. onwards. I don't like to get involved with much before unless it's an extremely obvious setup, and it would probably only be a scalp ahead of what could be a more directional move later on in the morning. That's just the way things are with gold and silver. It's a later morning opportunity, usually, not all the time, but that's the way I approach it. At the moment, um, things are bullish. If you look at the monthly conditions, here we've got them. I've got an indicator here. If you want that indicator, it's very useful with certainly my approach anyhow. And it is higher time frame candles. You can look for that in indicators. Higher time frame candles. It could be this one here. Let's click on it and see if it pops up. Yeah, it's that one there by Crollo or Croyle 041. And then you can adjust the settings how you wish. Okay, so let's look at this then. On the monthly chart, you can see that we're in an uptrend. On the weekly chart, you can see that we put in a first red week following 2 breakouts. That for me qualifies that as the first red week. The bias, therefore, is bearish on the weekly chart, i.e., you'd anticipate another week of selling. So this is a market that could be decelerating. That's not to say it can't decelerate and then rally, and we'll come to that in a moment. But there are prospects of a continuation to the downside on the weekly chart. Having said that, the danger in that is that last week closed as an inside week. For me, it would be worth watching to see how the price behaves at this point. If it starts building up, then you could anticipate that it's coming up again to take out stops above last week's highs. All right, so this here currently is a fake out low, which is bullish. So although there are prospects of a downside continuation due to the first red week, considering we're back inside of the low of that week, it's bullish. All right, so we have a bullish momentum chart on the monthly. There's nothing here for us to assume that this won't keep going up, and therefore on the weekly chart, you'd expect it to go up as well. But beware, well, watch it because it may well dip below last week's lows. So I put an alert on last week's lows if I were trading gold on a swing basis, but I'm just looking for day trades. So for me, the opportunity for the day ahead is bullish potentially. On the daily chart, we can see that Uh, Yesterday, the start of the week, was Labor Day. It was quite a bizarre day, really. Friday was also a difficult one, but with the holidays on Labor Day and being the month end of the quarter, end of the month. In any case, we sold off. We made a lower low yesterday. However, we took out the low of yesterday today, and we've pumped up. That also is a fake out low. That is bullish. So we've got alignment on the monthly, the weekly, and the daily chart bullish at the moment. So if we come into the charts and look at today, we're pumping up. All right. So we've taken yesterday's low. And we've subsequently pumped up. We've taken out the closing price. So that would be a line in the sand for me at the moment. Potential support area. It also aligns with yesterday's point of control. So I can immediately box that off as a supporting area. We are outside of the prior day's value area. So I can draw a line on that value area. Value area high. Okay. So that is also a potential support. Monitor how the price behaves around that level or area. Can't be exact with it. Doesn't give you the exact price on TradingView, but it's good enough to have a zone. Okay, so potential support, first layer of potential support, it's reacted from there already. Secondary layer of potential support, we can try and be as precise as we can. Obviously the resolution will move this around, but that's the point of control from yesterday. You can start to label these things up as follows. Yesterday or previous day point of control. Okay, and I'll make that white so it stands out. And we will pop in a note on this here as well. Previous day value area high. Make it white. Okay. So currently the highs of Monday are a target. You'll have stops above here with traders trying to sell this down. Price can easily come up and fill those orders. Above there, you've got Friday's value area low as a potential resistance. If it were to follow through, it's a breakout level. The market broke down from that area on Friday. So you can label that as Friday value area low. Potential resistance. And then you've got point of control. I mean, you can get carried away with all these levels, like striped pajamas, but Friday's point of control, I mean, it's down to you, what level you want to use for your strategy, and just rinse and repeat and try and find an edge with whatever levels you want to favor. And then that would be the Friday's value area high. And then, of course, you've got the high of the week, potential stops above, talked about yesterday in yesterday's video, stops above. There was an inside day. Which day was it? I think it was Thursday. Thursday put in the high of the week. No, Thursday was an inside day. It was actually Wednesday that put the high of the week. So there'll be stops above Thursday, and Yeah, so you've got the naked point of control from Friday. So I'll just label that as being naked. These naked points of control can be like magnets for the price to head to. So I'll put NC for naked point of control. Oops, no. Let's do Friday naked point of control. Clear it like that. There. Okay, so those are the bullish targets to the upside, and the bias remains bullish until we get below these supports, and then we can start contemplating the downside scenario. And that would start to kick in below yesterday's value area low, around about there somewhere. So previous day value area low. It's green for support, so I don't need to write support, potential support. Then you've got the lows of the day. I'm not going to draw that in. No need. You can see it on the chart. Low of the day. And then, or if you want to be precise with this, may as well. Okay, let's do that. Current day low of day. Okay, so potential support in here. And then if we break the low of the day, we have a downside continuation set up. However you want to go about trading that, and you'll have the previous Thursday has a value area low down here. Previous Thursday value area low. And then you've got the lows of the previous week. Low of week. All right, so gold does run about $37 on average. Can do around about $37. So that would take us into that low. And then if we were to measure the low of today to the 37-ish bucks, takes us up towards our Friday value area high. So the upside targets are within range, the downside targets are within range. All right, so the bias is bullish until we start breaking down these supports. Now, what I teach in my mentorship is to trade in line with the time frames. So you want time frame continuity. So the safer bet, if this were to flip over as we start breaking down these supports and the bias starts turning bearish, is if we don't take out the highs, what you would want to see is a take out the high and come back inside. That would be a bearish scenario. So if we took out today's highs as one option to be looking for shorts as it comes back inside and starts breaking down into yesterday's value area, that would be a powerful thesis for anticipating a short setup. But the safer bet would be when you're below last week's lows and taking out yesterday's lows for a downside continuation, right? So you might find that to be a safer bet to be waiting for a break of yesterday's lows, because otherwise you're trading into a fake out low, albeit how much volume is down here. You haven't seen much accumulation other than at last week's lows. So as soon as you're below last week's lows, that's looking quite promising for a downside continuation. But trying to trade into that from up here would be treacherous because you're trading into last week's lows, lots of volume accumulation, lots of demand in this area. So be warned about that. So I'd mark that off, last week's lows, which were put in on Wednesday. Right, we're not just trying to simply catch a move, we're trading setups. High time frame continuity is my approach. And we don't want to trade into peak formations. We have a peak formation low due to those lows. Can't quite get the... There you go. Okay. So over to silver now. Silver, we can see on the monthly chart we're in a downtrend. On the weekly chart we've come into this W formation neckline area, plummeting into that. And that's the weekly chart, and on the daily chart, downtrend. So everything is rather bearish on this chart. So the bias is bearish for the day ahead. At the moment, we're breaking down yesterday's lows. So breaking down yesterday's lows, we assume we will stay below yesterday's lows until proven otherwise. So the bias is bearish. On the chart, we've got a very clear downtrend. So, well, on the front side of that downtrend, we are bearish. Bearish. In terms of downside targets, well, first of all, we can see that we took out the highs of the previous week last week, and we've taken out the lows of the previous week. So it's an outside week, but it also closed as a bearish week. So it's a first red week after a series of rises. In a downtrending monthly cycle. So if we go to the daily chart, well, let's go to the weekly chart and look at the volume profile on prior weeks. We'll get rid of the daily markers. You know, we're in a downtrend. We are coming into a value area high, so that's something to be cautious of. Round about there, can't be exact on the figure. Should be green, sorry, for support. So it's a question of whether we get accepted in that value area high. In the value area from week commencing 12th of August, middle of August, uptrend flows, right? Plenty of stops in here, lots of people in the money. So plenty of money to go for if we get into that area. All right, and you expect the price would continue through the area, but it all depends on how it behaves at this support level. Okay, on the daily chart, Might be able to break that up a bit. Okay, so we're into Friday the 16th of August value area. We've been accepted in that. We can mark that off as a potential resistance if it were to flip back to the upside. Okay, and then we have the same day's value area low as a target. If we get below that weekly value area high, there's a potential target on the downside, and then also the lows of that day that coincide with these tops. Value area from the 12th of August, and we can start looking at prospects of, if we get below this value area low from the Thursday the 15th, then it opens the door for a run to the 14th of August value area low, thereabouts, and the lows of 15th of August. Some would call this sort of like a breaker block. So there's the order block pumped up. This would be the secondary block. So this sort of order block area as a target area to the downside. If this were to flip, then a test back above last week's lows, and a correction back up into that dump, targeting the highs from the start of this week, Monday, marries up with Friday's value area low on the upside. Right, so quite a comprehensive analysis. This can be used by anyone else wanting to have analysis on gold and silver for the day until proven otherwise. Currently on silver, stands out amongst the crowd as it's already taking out the lows, makes for an attractive opportunity to be shorting, but we have the weekly level value area high as a potential stronghold on the downside to be cautious of. But below it, then depending on how the price behaves as it takes it on, could be an opportunity for the continuation trade as per the prior analysis. And then in terms of ATR on this, the average ATR is showing about 83. So far we've done 32. So 83 takes you into that bearish target area, and on the upside, well up towards our upside target area.